Today, we're joined by Derek Corcoran, a recognized leader in digital onboarding and customer experience across the fintech industry. Derek most recently served as VP of Strategy at Meridius, and before that held senior roles at Woodridge, which later became part of RCG Global. He spent 12 years as Chief Experience Officer at Avoca and continued in that role after the Temenos acquisition, helping lead and scale Temenos' digital onboarding capabilities on the Journey Manager platform. He also runs the well-known fintech blog, FinTech Fanboy, where he shares his insights on banking transformation. We're excited to have him aboard the Active team, leading our fintech strategy and bringing his industry expertise to our clients and partners. Derek, why don't you tell us a little bit about yourself?
Yeah, thanks, Tyson. Look, as you can probably tell from the accent, I'm not a native American. I was actually born and raised in Ireland. Went to university in Dublin in the early 90s, kind of showing my age now. And I started my career with Allied Irish Bank, which was one of the largest banks in Ireland. I was there in Dublin. I worked with them in Singapore as well a bit. So I really just started straight out of college, went straight into financial services and kind of developed my passion for financial services and banking there. I relocated to Sydney in Australia in my mid 20s. I lived there for almost 20 years. And in the last 10 years or so I was in Sydney, I helped build up the Avoca business. As Avoca was getting some traction in the market, we knew that we really wanted to expand into the US. So I moved to the US with my wife and my two boys about 10 years ago, almost 11 now, actually. And it was great. It was a good run. It was hard work, but we built up the business. We ended up selling it to Temenos at the end of 2018. But I can't peel myself away from banking and fintech. So after the sale of the business, the last 6 years or so, I've continued to work in fintech, and I just love it.
You've led several startups through acquisitions, held executive roles at a global banking platform, and held roles at various consulting firms, both boutique and globalized. Having seen fintech from nearly every angle, what's your take on where the industry is heading?
Um, let's just talk about the industry. So we're seeing quite a bit of banking and credit union consolidation in the US at the moment. In fact, it's accelerated compared to previous years. We still have about 9,000 deposit-taking institutions. I don't think we need 9,000. But I also don't want to live in a US that only has nine. I don't want to find that we just have these mega banks. I think community banks, regional banks, credit unions are actually really important. And I think that consolidation is great. I think it actually makes each one of those individual organizations stronger because they have more scale. Now, if you want to talk about like banking and technology, I think banks need to almost go back to a focus on their core business of money and money management and helping people be financially secure. About 10 years ago, there was a lot of talk about banks being technology companies that happen to do banking. And personally, I've never really bought into that. I fly a lot with United Airlines. If United Airlines advertised themselves as a technology company that happened to fly planes, I'd probably fly with somebody else because I'm looking for somebody who is an expert in flying planes, not so much in technology. And I know the two are really interlinked. But I believe it's the same with money. I want to bank with a financial institution that's an expert in money and works with companies like us to provide the technology support for them. And I think that focus on being an expert in financial services actually creates an opportunity for community banks and credit unions. And the last thing I'll say on the kind of banking and technology is I'm also a passionate believer in embedded banking, which is the idea that we can put the banking services where the people are. And the simplest example of this is the auto loan. We took the auto loan out of the financial institution and we put it in the dealership because nobody wants a 6-year debt. They want a car, and the loan facilitates them getting that car. And banking products enable things like that. So, when I think about my children and their saving for their education, why isn't that initiated in the school when I enrolled them in kindergarten? When they talk to me about, hey, have you thought about setting up a savings account? Or when I think about checking and savings accounts in general, why aren't they embedded in payroll systems? So when I start my first job and I enroll as an employee, give me the ability to actually open my account and set myself up for savings right there when I'm getting paid. Split my money, put 60% of my checking account, 40% of my savings account, but do it via the payroll system as opposed to me having to go into another experience with a bank. So I think there's a lot of opportunity for community banks. I think there's a lot of opportunity around embedded banking, and it's actually a really cool time to be involved in financial services. There's a lot of change.
That makes a lot of sense. For many of the smaller financial institutions, if we think about community banks, small, mid-sized credit unions, they're working with limited budgets and resources. What investments would you recommend that they prioritize to maximize their ROI?
I view this really simply, maybe too simply. I think about the sales funnel for an institution. Scale is really important in financial services if you're going to be stable and continue to be able to provide services to people. And in order to have scale, you need to grow. In order to grow, your funnel, your acquisition funnel needs to work really well. So if we think about it, starting at marketing, then into sales or origination, and then into servicing, I kind of look at things in that order. So on the marketing side, is the institution getting found? Are they getting eyeballs through search, through social media, through advertising? And when people do actually come to their website, is it really easy to navigate that website? Can I figure out exactly what I need to do and get to the product that I need to get to quickly? And then on the sales side of things, which obviously is where I've spent a lot of my career, balancing fraud prevention and friction. Like, you can make it really hard for fraudsters, but then you end up making it really hard for good customers as well. Finding that good balance is really important. And, I've been able to work with clients who've done that, and Accutive has done that with clients where we see things like a 2-minute account opening for a checking account with over 63% completion rates and zero fraud. And that's the perfect balance. So that's the first thing I kind of encourage people to focus on is how is that funnel working today. The second is I'm still kind of scratching my head with the level of investment that's going into branches. Now, I'm not a branch naysayer at all. I think branches are still really important. I actually worked with a national bank to roll out their online account opening, and when we mapped the zip codes of the online account opening to where the institution had branches, there was absolute concentration of online account opening where they had a physical presence. So it makes perfect sense. Branches are still important, but the typical branch is about $1.5 to $2.5 million to set up, and about $600,000-$700,000 a year to operate. And for some of those smaller institutions, that's worked previously. But if they take some of that investment and channel it towards improving their digital experience, I think they'll reap the rewards. One of the regional banks that I've worked with that has over 400 branches, their digital customer acquisition outperforms their top 10 branches combined. And they've spent nowhere near the same money on their digital solution as they have on those branches. So it's a really great opportunity to just focus some of that investment in branches into digital experiences and reap the rewards. And the last area that I've been talking to people about lately is, no surprise, it's artificial intelligence. And I'm really trying to encourage our clients to start exercising that AI muscle. AI can absolutely be transformational in so many industries, including financial services, but banking is highly regulated. And the stories of AI mistakes are making the news. So you don't want to be that institution that ends up as a headline for a negative reason. But at the same time, you can't wait until somebody tells you, hey, this is okay, this is safe to do. So I've been working with the team, and we've developed like an Accutive AI playbook, which is kind of like a low-cost starter pack, a plan to actually start to incorporate AI into an institution. It's low risk, high reward. And I think it's something where these institutions that we're working with need to start exercising that AI muscle as soon as possible, but do so in a safe way.
It makes a lot of sense. What are some of the untapped opportunities you see in the digital banking space?
The biggest one that I have been working with some clients on at the moment is the digitization of more complex products. A lot of investment has gone in over the last 10, 15 years to improve the digital experience for retail banking products. But business banking, wealth management, investment management are still, fairly legacy in terms of how customers engage. So if you take business banking, for example, I was involved in a survey a few years ago with small businesses. 87% of them said they find it really important, or they want to be able to apply for business banking products to help their business digitally. 32% of the top 50 banks in the US actually offer that ability today. The other 70% or so, you've got to go to a branch, you got to have a meeting with somebody. And that's not what small business owners are looking for. And they don't have time, frankly, for that in a lot of cases. And then on the wealth management side of things, a lot has been said about the generational transfer of wealth, and it's real. There's some big numbers being thrown around and timelines like in the next 20 years. But some of the research I've seen is saying that about $16 trillion is going to transfer from silent generation and boomers to millennials in the next 5 years. So by 2030, 16 trillion will go to millennials. And surveys I've read have indicated that 81% of those millennials have clearly said, we're going to fire our parents' financial advisor. So they do not want to work the way those firms have been working historically. So we can do a lot to bring that kind of digital experience, that kind of Robin Hood style experience to things like wealth management or even business banking. So I think that's a really kind of untapped opportunity.
So you've only been here for a few weeks, but where do you want to see Accutive FinTech go over the next 12 months?
12 months is a bit of a tough ask. I've got a fairly big goal. I'm not sure we'll get there in 12 months, but I would like to get to a point where Accutive is the de facto standard for digital banking solutions at regional and community financial institutions. So I want to be like the F-150 of trucks. So, if you think about buying a truck, the F-150 is absolutely going to be a consideration, or the Dyson of vacuum cleaners. When a financial institution thinks digital, I want them to think Accutive, and I want our track record, which you already have, to demonstrate that we can be effective. The other area that I would like to be able to do more around is democratizing access to best-in-class solutions. I've had an opportunity to work with very large financial institutions, digital-first banks, and some of what they've built or are building is really impressive, but it's out of reach for a credit union or a community financial institution. They just can't compete on dollars, but they can absolutely compete on agility. In fact, compared to the big banks, smaller institutions actually have an advantage when it comes to being able to move quickly. And things like cloud and APIs and SaaS have made it possible to take those solutions and make them accessible to those institutions. So again, back to that funnel idea, I'm looking at all those areas of the funnel. What are the best possible solutions, and how do we package those up and offer them to those community banks so that they can compete really effectively, and use that kind of judo kind of approach of using size and momentum against those big financial institutions, because as I said, I don't want to live in a US that only has 9 banks. So I want to see the smaller institutions succeed.
So what made you decide to join Accutive FinTech?
Well, I've actually known our CEO for over a decade. He was actually our first implementation partner for Avoca and the product that's now Temenos Journey Manager. And right back from those days, the reason we actually got introduced as Avoca to Accutive was one of the clients we were working with was very, very happy with the consulting work, the quality of the team that Accutive had brought them. So they wanted to use our software with the Accutive team, because the customer focus here, backed by the technical skills to actually get things done, is really important, and it's something that I'm passionate about. For Accutive, when we bring on another customer, it's not just another project. It's not just another statement of work. There's a real focus on what value are we actually delivering to our customers. I've been in the financial services industry and tech for over 20 years, and I formed a very strong opinion, which can be controversial sometimes, that banking is a business. Technology kind of isn't. Technology is actually an enabler of banking. Banking would still exist without technology, but technology doesn't exist without the businesses that actually services. And that aligns with how Accutive operates. There's a focus on what are we actually delivering in terms of value? What are we enabling for our customers as a result of the project? Are we making them easier to do business with, faster, cheaper, compliant with government regulations? There's what's the result that is getting produced from the project, and that's core to me, and it's core to the Accutive business. So it was a natural fit for me.
Awesome. Well, we're very excited to have you aboard the Accutive team here.
Thanks, Tyson.